Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast presented in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. And before we jump in today's episode, I just want to let everyone know that we have some really big news coming during our next podcast, and it's all good news. So keep an eye out for that. So on today's episode, we're going to uncover a hidden tax benefit that may be able to cut hundreds of dollars from a salaried employee's tax bill. In the past, this benefit was mainly used by those that are self-employed, but this is no longer the case as employees are more and more working from home due to COVID-19. This benefit allows salaried employees to claim certain home office expenses and directly deduct the expenses from their income. And this deduction can be massive too. The CRA reported that the average claim in the 2018 tax year was $1,561. Now, what does this actually mean in dollar savings? And the answer to this really depends on which province you live in and your personal situation. But to give you a good example, in Ontario, it would be about $313 at the lowest tax rate or $835 at the highest. And you can see that this is obviously no small amount. This money can be used for many other things. So today we're going to look deeper into this program, how to qualify, and importantly, how to do everything right. At the end, we're also going to take a look at a bonus savings opportunity. So as a quick refresher, tax deductions reduce your taxable income dollar for dollar. So for example, if you had total employment income of $60,000 and deductions of $5,000, then your taxable income would be $55,000. This taxable income is then what tax rates are applied to. So reducing this amount is one of the best ways that we can actually cut our tax bills. And many people are already using deductions but may not actually realize that they are. One of the perfect examples are RSP contributions. Essentially, every dollar that you contribute towards an RSP reduces your taxable income. So the work at home expenses would essentially have the same effect on your income taxes. So the official title of this program is called Workspace in the Home Expenses. And as mentioned, it's been around for a while, but many people don't even know it exists. And the type of expenses that you can claim include rent, electricity, heating, and maintenance charges like having a cleaner. However, expenses that you're not able to claim include mortgage principal and interest, home insurance, property taxes, and something called capital cost allowance, which is just a fancy word to describe depreciation. For any of these expenses, you must also not have received or refuse to receive a workplace allowance to cover the fees. So to qualify, your workplace must be used in one of two different ways. The first way is that the workplace must be used the majority of the time for your employment, which is defined as being used for over 50% of the time. The other option is to have a dedicated workspace that's used to regularly and continuously meet with clients, customers, or other people in the course of your employment duties. And the reason why bringing attention to this program is so important now is that many of us have been working from home since March, and we're quickly approaching the 6-month mark, which also happens to be 50% of the tax year, which makes us eligible for the first out of the two criteria. And another big qualifier is that your employer also needs to agree that you're required to work from home. And this must be included in your employment contract and also included on a special tax form called the T2200. And this form sounds pretty bland, but it's pretty straightforward to fill out. It's really just a 3-page form, a bunch of yes-no questions that your employer needs to fill out. So if you qualify, you're probably wondering how to receive this deduction. And the first step is to really keep records of all your eligible expenses throughout the year. You then need to determine how much of these expenses you could actually claim. This is a little complicated, but it's not too bad. Basically, what you're trying to determine is the percentage of your workspace to total living space. The most common way to do this is divide the square footage of the office by the total furnished area, and then at the end, what's going to happen is that this is going to yield a percentage. And the amount that you can claim on your taxes is this percentage of the total eligible costs. So let's say that you paid $2,250 for rent and other expenses, which is $27,000 over the course of the year. You also determine that your office usage percentage is 20%. This would then mean that your income tax deduction will be $5,400, which is obviously a very large amount. And the next step is really just to be patient, as you'll need to claim this when you file your taxes in the spring of 2021. And then when you finally do your taxes, the place where you include this is a tad hidden if you don't know what you're looking for. You need to fill out a special form called a T777, and the amount is included under the heading of Other Deductions. And you can see how this could easily slip by someone. It's important to point out that these deductions can only reduce any income from associated employment and cannot reduce any employment past zero. However, any unused deductions can reduce future earnings at the same employer. So that's it for the workspace in the home expense deduction, but there's some other expenses that you may be able to include in your taxes at the same time. Likely the most relevant one is that you can claim supplies that were used for employment purposes that include items like printer cartridges, stamps, paper, and more. Like the other deduction, one must have this included in their work contract and not receive an allowance from an employer to claim the expenses. The T2200 must also be filled out to support this. And in some cases, you could also claim a portion of your cell phone plan, including any long-distance charges if you're required to make them for workplace purposes. As always, documentation should be kept to support this claim. So that's it for today. As mentioned, keep your eyes peeled for the next episode because we do have some really exciting news. And direct links to all of the deductions that we talked about will be shared in the online blog. Thanks again for listening to Simple Money. As always, please leave a review if you're enjoying the show. And if you ever need to contact me, you can reach me at info@ffcoach.ca. Take care and talk to you soon.